All right, my last post, I looked at Bitcoin and the crash that was occurring. Um, I see a lot of traders and analysts speculating that um, Bitcoin is going to bottom soon, and then the run to 100,000 or a million. I'm even seeing people predicting a million is going to start soon. I think they are going to be um, way off the mark. I think the Bitcoin bubble has popped, and generally, um, capital doesn't flow right back into a market once a bubble has popped, or even if you don't consider Bitcoin a bubble, um, it went from being 200% above the 200-day moving average to all the way back down to the moving average. So I just don't think that capital is going to be rushing back into Bitcoin. I think there's still plenty of liquidity. I think the Fed is going to uh, pump more and more liquidity into the market. Although I'm going to cover this in this video here, I think we may be in a difficult, frustrating sideways phase for a little bit longer, um, with another sell-off coming maybe in June. But um, the, the the next bubble is not going to go back into Bitcoin. Um, it's going to look for someplace else, something that didn't get hit anywhere near as hard as Bitcoin. So I I think you're going to be barking up the wrong tree if you think that Bitcoin is just going to resume its march to 100,000. I think you're going to be um, vastly disappointed. um, where I do think the capital is going to go is I think it's probably going to go into the stock market. So here's what I think is playing out. This is the 2000 bubble. This is the top. If you'll notice, here was our slingshot move. This was the um, long-term capital management and the Russian um, debt default. This got everybody on the wrong side of the market. It looked like the financial markets were going to implode. Um, the Fed came to the rescue, slashed rates, started, forcing liquidity into the market, and you get that um, extremely aggressive move out of the slingshot. But you know, we didn't go straight into the melt up phase, although in real time this did look like a melt up phase. Um, it took, once this initial move out of the slingshot, the Nasdaq entered a difficult 8 month kind of a sideways churn. It was still making higher highs. You can see that this intermediate cycle from here to here did make a higher high than this top, but not much. It wasn't a really sustained breakout. And then we get this move into this intermediate cycle low, another fairly strong push, but again, not a real sustained breakout, um, before moving down into another intermediate cycle low. And then we're kind of stuck for several months at about roughly 2,900. And then when we finally do get done with that sideways consolidation, we get a gap up here in October, and then that ignites the melt up phase. And just like I've been warning, there was still an extremely volatile event even during the middle of this melt up phase. Both of these were over 10% corrections, and they occurred in a very short period of time. In real time, this was extremely scary. This looked like a double top, uh, and in reality, it was only about halfway through the final bubble. So we've got another one of these coming, but I think right now we're stuck in this kind of a market, one where it's not easy to make money. So let me fast forward to our current market. All right, so here's the slingshot move. The closing down the global economy created a basically a depression. And then central banks started printing money like crazy. That gives us this very sharp, aggressive move out of the slingshot, and then we get our first little consolidation event. This one was pretty brief, and then we get a second leg up, and now I think we're in that similar phase to what took 8 months in '99. Although I don't think this is going to take 8 months. I don't think it's going to be that long, since we already had one consolidation phase here. But I do think we're probably still stuck going sideways. So this is not going to be a friendly period of time for the novice amateur traders that want to over leverage and they want to get rich quick. And these are the people that get frustrated easily when the market doesn't give them what they want. And that's what has to happen, because those people are the ones that are going to push the bubble. But those people have to become completely disgusted with the market first before the melt up can start. So I'm pretty sure we've got a daily cycle low here, but I am not convinced yet that we're going to break out above. Our resistance appears to be about 14,000, a little above. And once we get the sustained breakout from that, then I think we start the melt up phase. But I am not convinced that we are going to start that during this daily cycle. I think there's a pretty decent chance that this daily cycle will maybe come up just a little bit short of these highs here and then roll over and come back down again, or probably more likely is we'll get a slight breakout above this, but it won't produce a sustained move, and then we'll roll over and probably, in my opinion, probably start down into an intermediate cycle low that may come down and drop below this daily cycle low here, and get a little closer to testing this ICL. So just a very difficult market to trade, and not one that's going to give the amateur, impatient, over-leveraged type traders what they want to make money. This is the kind of market that takes money from those kind of people, gets them very frustrated, and they give up hope. And then when we do start the melt up phase, then you've got a huge pool of those kind of traders that are hesitant and hold off on buying until the move is well advanced, and those are the chasers that pull, or that push the final phase of the bubble. So I think for another month or so, we're probably in a phase where we're just going to try and hit singles, not home runs. If the Nasdaq does manage to come up here and break above this high, I'm probably going to look to take profits pretty quickly. And I don't want to get caught whipsawing positions during this sideways churn. This is not a great period to be leveraged. If you don't pick the tops perfectly, then you get dragged down into a cycle correction, and most people panic and sell at the bottom. So that if you're using leverage, then if you're an emotional type trader like this, then you're buying high when your emotions are telling you the coast is clear, and you're putting on leverage. And then when the market doesn't give you that sustained move, then you panic down here and you sell that leverage for a big loss, and you just tear up your portfolio trying to play leverage in a whipsawing sideways market. Ultimately, I think this is going to give way to the final melt-up phase, but I'm just not convinced that we're quite there yet. We may need one more pullback into an intermediate cycle low. So basically, I think this entire intermediate cycle is going to have to be one of sideways churn and whipsawing before we can um, create the fuel we need for the final bubble phase. So um, this is our first daily cycle. I suspect the second daily cycle is going to be roughly the same, and then we'll get an intermediate cycle low, probably somewhere back below 13,000 to get everybody bearish, and then that would probably be the setup for the next intermediate cycle that will break out above 14,000 and give us that sustained move into the bubble top. So if you're one of those amateur impatient type traders, you're just going to have to control your emotions here. Understand that the market is not ready to give you what you want, and it's probably going to be later in the summer before we're ready for that phase of the bull market to begin.